Hi, y'all. Welcome to DIY Financial Planning. I will be your host today. My name is Kristen Afilumo, CDFA. I'm a certified divorce financial analyst, financial planner, and owner of HerPlanning. We give financial advice, we help you with investments, and we help you settle insurance and risk management needs. I'm really excited that you carved some time out of your day to take advantage of this free webinar. I don't want to make this real lengthy because I hate long webinars. I don't want to spend an hour doing the video with you. My hope is that I give you some clear direction on what a next step is, whether that's working with myself or someone like me, or sort of sending you in a direction so you can do it on your own. I'll be going through a few ground rules in a minute, but first just wanted to say welcome. Of course, you might want to know a little bit about me before we jump in. So I was recently married just December of 2021 to my husband, Leon. We live in Bixby, Oklahoma. It's a suburb of Tulsa with our 4-year-old golden doodle, Charlie. If you follow me on Instagram, it's mostly just pictures of Charlie and food. And we love to travel, so lots of traveling. I'm originally from Southern California. I grew up between Southern and Northern California, actually. I'm a graduate of San Diego State University. Go Aztecs. I lived in Dallas for quite a while, so most of my clients live in the Dallas area. I'd say my second largest market, Southern California, because that's where I know a lot of people. My practice is completely virtual. So if you're curious to learn if I can work with you in your state, feel free to reach out to me. Other things you should know about me: I am a certified yoga instructor. I do not teach, but I do love to practice yoga. I mentioned I love to cook. I love food in general. I love coffee. And one interesting fact about my practice is it's been virtual since 2018. Living in Dallas, and if you live in a big city, you get this. Leaving your office to drive to a meeting or having your client come to see you, it was such a drag. So I decided to go virtual a little while ago. So then in 2020, the rest of y'all decided to join me. Welcome. Here's a quick list of my credentials as a financial planner. I've been in practice since 2014, and that's when I started what is now HerPlanning. I do have 2 designations or specialty areas that are family, businesses, and divorce. HerPlanning tends to work with women. I find that the people that come across my desk are often divorced. They own a business, or they've inherited or come across a large chunk of change. So sometimes I have clients who are part of a company when it's tiny and then it grows really fast. There's an IPO and they have a windfall of money. Just based on the age I am and the age my clients are, we're at a point where we're starting to inherit money from parents and grandparents and wanting to be good stewards of their resources. People reach out to me for help with things like that. We're also in a point in time where a lot of people who are older are looking to transition out of their businesses. So they're looking for a retirement plan. They've built a phenomenal business and they're looking for what the next step is in their life, both life-wise, lifestyle-wise, but also financially. How do I turn this business into cash flow to sustain me throughout retirement? And then I mentioned divorce, but that's a transition that so many people, women I work with specifically, find themselves in. And it's just kind of figuring out where to start and how to move forward. So I find that I work with people during those transitions often. So people I work with are, again, wanting to be good stewards of their resources. They value professional services and independent and objective advice. They're goal-oriented and they value the accountability that I provide. And of course, they love to be in community. I like to add that they enjoy a good French martini on the patio with their girlfriends. It doesn't have to be a French martini. It's whatever beverage you prefer, but also brunch. Just people that love to enjoy life. Yes? Okay, maybe that's you. And the absolute last thing before we jump in is I just want to make sure you're clear on what my mission is. As a human, and of course, as a financial planner or advisor, my goal is to help you be great where it matters without apology. And I added that without apology in there because I tend to work with a lot of women and we are very busy apologizing for things. that are not our fault. But I really want people to be able to show up in their lives wherever it's important to them, whether it's with their family or their business, without having to apologize for the financial fogginess and just the uncertainty that lives in their brains around money. So that's why I do what I do. As we're going through this, if you have any questions, you're welcome to text me at the phone number below. You can also email me, or if you're ready to schedule a meeting at some point during this webinar, you're welcome to schedule a free financial planning introduction. Go to my website, click on one of the links to schedule a meeting, and you'll be on my calendar. A few rules as we go through this: be nice to yourself. Yes, you didn't know this growing up. Had you known, you would have done better. Nobody taught you this in school. Totally get it. Most of my clients are first generation, I like to say, with some money. They may not be considered wealthy, but they make really great money, or they've inherited some money and they just want to be good stewards of their resources. So you're here, and that's what matters. You're taking a step. Start where you are, and hopefully between now and the end of this webinar, you'll be ready to take action. Take the first step. All right, let's get started. So the first area we'll cover is, what is financial planning? What is it? What are we going to talk about today? Second is financial planning philosophy. So these are the rules that guide my judgment in any direction I give you throughout the process. I'm going to give you those rules and that framework today, so you can take it and run with it and let me know how it goes. Third is setting goals. Sounds simple, but setting goals, clarifying, crystallizing goals, your timeline, what you want to accomplish, how much it costs, that is a big part of financial planning. And I spend a lot of time working with clients on that on the front end of our process. And I've heard that cash rules everything around me, but I really like to think that cash flow rules everything around me. So we're going to talk a little bit about cash flow. If you don't know what cash flow is, stay tuned. I don't like to use the B word, which is budget. So it has something to do with that. So of course, financial planning encompasses a lot of different things. I've put a pretty comprehensive list, not entirely, but pretty comprehensive list up on the screen now. But a lot of times when people come to me, they're concerned about one of a few things. They are concerned about their financial position. So whether that means they have debt they need to repay, or they're trying to grow their net worth, or both. How do I increase my net worth by paying off debt, getting a handle on my cash flow, understand what's coming in terms of income versus what's going out in expenses. And maybe I also want to start saving to make a large purchase, buy a business, buy a second home, or maybe even it's family planning. So if you're thinking about having a kid or having another one, how do we fit that into our current cash flow? Also, you're thinking about things like investing and saving. So where should I save money for a particular goal? And how should I invest those assets? Also, there's so many different types of accounts. Should I be saving in a retirement account, a college planning account, a non-qualified account? What do all of those accounts mean? So kind of going through those and figuring out what makes sense for you. Of course, the blind spot in all of this is what could go wrong. So we also talk about risk management planning as a part of financial planning, covering the what ifs, like what if I'm not able to work for an extended period of time? What if something happens to one of the partners in my business, whether they get divorced, they are not able to work, they become disabled, or heaven forbid somebody dies? How does that impact the business? If someone in my family dies, how does that impact our family financially? So just covering all of those what ifs along the way. I've talked a little bit about business planning when I covered risk management, but as we're growing the value of the business, what are some things we can do to incentivize our key players, salespeople, other partners to stay with the business long term, and also just the rest of our family that works for us, our team? What kind of incentives are they looking for to stay with the company in terms of retirement savings plans and things like that? And of course, there's always those specific things that are just specific to your life stage. So whether you're getting married or finding yourself recently divorced, those are all different phases that make your planning a little unique. And so I would consider all of those to be a part of financial planning. All right, let's talk financial planning philosophy. So I know that you're not going to like this so much, but I need to write on my iPad. So I won't be looking at you, but I promise I'm here with you. I'm paying all the attention. I just find that this goes better if I like handwrite it so you can see it. So I will share this with you on the screen so you can take a look at it. So let's talk about financial planning. The easiest way I've seen to describe this is by using a triangle. So we've got a triangle up on the screen. Financial planning mostly exists in three core areas. The first one is risk management. The second one is wealth accumulation. And the last phase is preservation, distribution, and tax strategy. Stay with me. I know you were like, I thought this was just going to be an introduction, and why are you using all these big words? Just stay with me. Stay with me. We will break it down. So risk management is all the things that keep your plan going when something bad happens or something unexpected happens. And so the things that you're probably thinking of right now are things like insurance or emergency savings. So let's start with that. An emergency fund is the first thing I'm looking for when I'm looking at your planning. Do you have, and some of you've got a ton of cash sitting in the bank, you've got a couple 100,000 or 40,000 or something in a bank account. And that is in part your emergency fund, but you just haven't clearly defined this is how much money I need for an emergency, and also assigned a cap to that. So that's something that we would talk about is what is your emergency fund? So defining that. Just to give you a little spoiler, I like 3 times expenses in most cases. So what do you spend on a monthly basis? What's that total amount times 3? And in a lot of cases, that's your emergency fund. That's the number that you need, and anything above that can go somewhere else to be doing something towards helping you hit your goals. What cases is it not 3 months? Any case where you're still uncomfortable, not any, but many cases if you're still uncomfortable. And if you own a business or you're self-employed or you work in an industry that's super duper niche-y, and if you lost your job, it would take a really long time to find one, that's an area where maybe a little bit longer makes sense. The next area I alluded to earlier, or really the rest of the areas, are insurance related. I left one thing out, debt repayment. That's an abbreviation. Let's go with the whole word so later you remember what I said. Debt repayment, paying off debt, so you're not paying interest. I like to keep it down there. Okay, insurance related are things like life insurance, disability, auto, home, general liability, health. I'm just throwing things out there. We'll come back to why they're important. In the insurance category, we're thinking about how do we make this plan self-completing? So if there's someone that depends on you financially, somebody in your family, a spouse, children, grandparents, etc., if I were to be gone, how much money would we need if I were to die? How much money do we need going into the household to continue the lifestyle, the life, the retirement planning, what's going on for funding for kids to go to college, legacy gifts, things like that, live in life insurance land. On the other hand, it's more likely that you're just going to live a long and healthy life. So, if I were to become disabled and just couldn't work for an extended amount of time, what would I do about that? And so when people think about disability, they often think like, if I were to lose a limb, or if if I were to get in a really bad car accident going up the tollway, and it's unlikely that something like that would cause you to become what's considered disabled. Usually, what insurance people see in terms of claims are some sort of weird illness you didn't see coming that keeps you from going to work on a full-time basis or at all for maybe an extended period of time, like 2 or 3 years. Usually people recover from these disabilities and go back to work at some point. So what we're concerned about is if you can't work for an extended period of time, you only have 3 months in your emergency fund, right? Based on our just recent conversation. How would we make it so that we're replacing your income to the household? So that's extremely important if you're not yet retired. If you are close to retirement, I'd say 50s or older, in some cases younger, and in some states younger because there's mandates in some states. But you also may want to consider long-term care insurance or some sort of long-term care planning that covers the cost of you needing to stay in a facility if you're unable to take care of yourself, or someone coming to your house to take care of you some of the time, helping you with things like getting dressed, clothing, transferring yourself around the house, cooking, feeding yourself, stuff like that. So those are things that, depending on what your life stage is, might be relevant to you. If you have enough money that you could retire right now, you don't need disability insurance. If you don't, it's likely that you do. So just keep that in mind. Auto and home insurance sound kind of weird, but they one, cover your liability. So if I used to sell property and casualty insurance, and I used to use the example because it was so outrageous. If I'm driving my car and I hit a school bus full of nuns, what happens? Am I legally responsible for that accident and all of those people and that vehicle that were injured? Yes, but there's limits on my policy. So if my auto insurance doesn't cover all of the damage or injury, I'm personally responsible for it. General liability insurance, if you're a business owner, if someone injures themselves, or if you have some sort of professional liability like I do, you want to make sure you have a professional liability insurance policy. So all of those things just protect your nest egg, your wealth, your ability to continue to save and do what you have to and want to do. I think that pretty much covers it. Health insurance is an area most of you are familiar with how health insurance works. It just keeps you from having to spend your own money if something catastrophic happens health-wise. But any questions about that, don't forget you can text me at the number I gave you earlier, or email me, or don't send a carrier pigeon because my windows in my office don't open. But all the other ways that you normally get a hold of somebody, you can send me a message about your specific question. So the area most of you are the most familiar with and think of when you think of financial planning is wealth accumulation. Wealth accumulation covers saving for goals like, let's say, to buy a house. That's a goal lots of people are working on in different parts of the country. It takes different amounts of money. California, I'm looking at you. So saving to buy a house, saving to purchase a business, to start a franchise, just general, what I consider midterm savings goals. Midterm means not immediate, like not 1 to 3 years, because if it were less than that time period, that's like a cash savings kind of goal. But something that's 3 to maybe 20 years. It's 3 years out, but before retirement, whatever that time frame is for you. Things like saving for college. So I'm going to put 529 plan here because that is the type of account that a lot of people use to save for college. And then you've got all of the alphabet soup of accounts. So this is your IRA, your Roth, your 401k, your 403b, your HSA. So all of the different types of accounts that are qualified, that have a special qualification with the IRS, meaning they get special taxation. So I'll do another webinar at some point about like the different account types. I like to say, again, the alphabet soup of accounts, what might be a good fit for you, what might not. You can do some research online. You can email me, set a call, and then we can talk about what might work for you. But generally, just investing or wealth building in general goes into this account. You may be wondering, Kristen, wealth building sounds really cool. And everybody on Instagram says it's what I should be doing is saving and investing. Why should I hold off on doing that? Or should I hold off on doing that to do the stuff at the bottom, which is the risk management area? And in a lot of cases, the answer is yes, you should do risk management first. The risk management pieces are not sexy, but they could save your entire plan. A good example would be many of you know somebody who in 2008 ish lost a large percentage of their money in their 401k. And they had to, this story, they had to go work at Walmart as a greeter to supplement their retirement, or they had to go do something to go back to work. In a lot of cases, that happens because their risk tolerance is not does not line up with how they're invested in the stock market. Sometimes it happens because there's an emergency that they had not planned for. So if you're in retirement, 3 months of cash is not enough cash. You need more like a year or two, probably two of cash. So that's a difference depending on your life phase. Also, if you were to become disabled, like we talked about, the average length of claim is maybe 2 or 3 years. And so you go through your emergency fund, you don't have any other savings. What comes next? Your retirement account, your IRA, your 401k at work, things like that. So we want to make sure that we're building you a solid foundation in your financial plan so that once you start saving, you don't have to divest or stop saving. You can just go forward and be as protected as possible saving. The last part of the puzzle is preservation, distribution, and tax strategy. I'm not going to talk a ton about those things right now. They are preserving your wealth is going to be specific to somebody who's built their wealth up already and wants to talk about specific strategies to save, to preserve, to pass on to the next generation. It's real specific depending on your circumstance. So that's why I don't want to cover too much of it today. You're probably not DIYing that part anyway. You're also probably not DIYing your tax strategy. And hopefully it's a good CPA or accountant or myself would be a good help to you in that area. And then the distribution strategy, there's a lot of rules. So if you're close to retirement and you've heard like I could take 4% off my portfolio and live forever kind of a rule, contact me about that. I'll do a chat with y'all sometime soon about specific cash flow planning strategies for when you're in retirement and you're looking to transfer wealth to the next generation, create a paycheck in retirement, set up a distribution strategy that makes sense for you. How are we feeling? I'm going to put on the next screen a cleaned up version of this in case you can't read my handwriting or want to catch up on your notes. Whew. So now you have a really great basis of understanding of financial planning. And so that should help shape how you decide what to do in what order. We'll talk a little bit more about that coming up. But we're at what could be the fun part. I hope this is a fun part for you. We get to talk about what you want. And so I put together a little example, things I see on a regular basis. The amounts are sort of arbitrary. I just put them together to give us something to focus on while we work together. Feel free to take your own notes and write down your own numbers or your own goals as we go. But what is important for you to consider is, what do you want? When do you want it? How much does it cost? And what do you have already that's going to help you get to your goals? So the hardest part about this whole process when I first start working with people is just like establishing, what do you want? It is not often that someone sits down and asks, what do you want? And then shuts up. But I do that. And so this is your time to write down what you want. Here are some reactions. I get to this question all the time. Number 1, I don't know. Number 2 is some version of, I think I'm supposed to have. The third thing is sort of a honest, this is what I want. And then the fourth layer of the what do you want question is what you actually want but are too afraid to even think about. So I want you to dig really deep and think about, what do you really want, regardless of what it would take for you to have it, and write some of that stuff down, because just writing it down is really powerful. And just sort of dreaming. So if you want to retire in Jamaica, or you want a beach house in Jamaica, I don't know why Jamaica's on my mind, but whatever. Write that down and just put it on your list. Putting it on your list is not going to hurt anything. It's not going to make you further away or closer to any of your goals. We're just making a list. And so I kept this kind of simple. I just said that we want to pay off our student loans, pay off a credit card or a couple of credit cards, buy a lake house, purchase a business, or retire. And so also, just because you write it on this list does not mean that I'm committing you to it for the rest of your life. It could change. You may decide you hate lakes and you only want oceans, and I'm here for it if that's you. Or you may decide that you never really want to buy or be involved in any sort of business, or maybe you want to buy a franchise, or whatever the case. You want to be ready for a business opportunity or to invest in a friend's business, whatever it is. Just write down what you want. Okay. Next, write down, when do you want it? When do you want to have it by? And so one of the number one pitfalls, actually, I see when we're doing planning is that people's goals are really short. They're in that short-term time horizon. And once they reach their goals, this is especially true when you're hitting a savings goal, like saving for a house or paying off high interest debt. Once they get through those first couple of goals in the first few years, they lose track of what they were doing because their focus was so short. They reached the end of the line, they hit that goal, and then they're like, I got nothing else to do, so I guess I'll let my money do what it wants again. And they end up just kind of losing focus. Sometimes they end up back in debt. And so this exercise with creating some longer term goals should help you stay focused on the horizon for far, far away, if that's the timeline for you. So write down, when do you want it? High interest debt, I'd say anything, just generally anything that has an interest rate of over 6%, I would target to pay off in your ASAP bucket, so less than 2 or 3 years. Things that you will definitely do, like retire. You are for sure going to get to a point where you don't want to work anymore. Retirement, independent wealth. You want to have the option to not go to work if you don't want to. That's what I mean when I say retire. If you want to sip sweet tea on the front porch at 70, cool. If you're like, I'm never really going to retire because I love my business and I can't see myself doing anything else, also cool. What I know is at some point you're going to want to have the option to have somebody else run your business so you can travel more, or just have some increased flexibility. So when I talk about retirement, you lovely little millennial people, it's me also. I mean, when do you want to become independently wealthy? So figure out what you want, what the time frame or time horizon is for you to get there, and then how much does it cost? If you don't know how much it costs to retire, you can use an online calculator. You can ask me. I put $4 million in there just because, we're not going to argue about it today. We're just going to pick a number and say that's it. I see that a number around there quite a bit. And I also plugged in a few numbers for your student loan at $145,000, $12,500 for the credit card, $50,000 I think was my business opportunity number, and then $100,000 for down payment on the lake house. So that's how much it's going to cost. And then what you have that's already in place that could help you hit that goal. And so you may have some cash and savings. Let's say you have $20,000 in this example, a 401k or retirement savings plan that's helping you to save towards retirement. And hopefully you've got some positive cash flow. That means after you pay all your bills every month, you have extra money that you can make choices with. Yes, lying around that could be redirected to financial planning. So if you feel like you don't have a lot of extra money, hopefully you do, and we just need to find it. And that might be that you're spending it on the little app on your phone that sends you things magically in your mail all the time. Shopping at the Bullseye Boutique, which is one of my favorite places. You may have heard of it. Where else? Delivery services, eating out, subscriptions, all that stuff. So sometimes it's just about reclaiming your cash flow. That's what we have to do. So getting intentional about where you're sending money, and we'll talk about some tools to do that, but just getting intentional about where your disposable income is going and calling it back home and redirecting it to hit some of your goals. Cash flow is king. So just knowing what your cash flow is, again, your cash flow is your income, positive, minus your expenses. Hopefully, if you do your income, which is how much comes into your account every month or how much you get paid, how much you pay yourself if you're a business owner, after all your expenses go out, required expenses, you have to feed yourself. I'm not going to throw a number out that's appropriate, but you have to feed yourself, you have to clothe yourself, you have to, drive your car and go to work and all of that stuff. You might have some minimum payments on debt. We're talking about minimum payments right now. Just what's a mandatory payment that you have to make in your life? And there's a number that's left over. That's your cash flow number. Hopefully it's positive. If it's negative, you got a lot of work to do to get your expenses down or your income up. I'm a big fan of just getting your income up. Yes, sometimes your expenses can come down, but just keep in mind there's two different parts of that equation. It doesn't always mean that you have to budget and spend less. Sometimes you just need to make more. Just make more money. I say that to people all the time. And sometimes it works and they go do it. Sometimes they just look at me like, what do you mean? So cash flow is an incredibly important part of the conversation. And then lump sum. I work with women, I said earlier, often that we're going through a divorce and they have a lump sum from their divorce settlement, or maybe you've inherited some money, or maybe you've been a really great diligent saver and you've got some money in the bank over and above what we think needs to be your emergency fund. And so considering what's your lump sum amount that you could save if you have it, and then what can you save from cash flow, those are the two things you're going to want to know to start to figure out where you should direct money. And I often do this exercise with clients where we just talk about visually lay out what their goals are by time horizon. So you've got, again, your short-term time horizon. These are the same goals we worked with before. And 0 to 3 years, right now to 3 years, you want to make sure that you're paying off your high interest debt, you're saving for an emergency, or have established an emergency fund. And then any other short-term cash goals or cash needs you have. And so again, I consider short-term for the purpose of this exercise, 0 to 3 years. Money you need for this goal is either like you're paying down debt, so you're paying a credit card company or whatever the case, or you're saving it in the bank. So an emergency fund or emergency money really should be in some sort of cash or cash equivalent. Fight me in the comments, send me an email, text me if you don't know what I mean. But basically, if it's an emergency fund, it should just be sitting in the bank where you could access it in the event of an emergency. Midterm is 3 to whenever you retire years. In this case, this person retires in over 20 years. And so those are all the things that happen along the path of life between now and retirement, now-ish, 3 years out in retirement. So these are things like, I didn't put this on there, but saving for your kids to go to college is a really popular one. Saving for your vacation home, starting a business, repaying student loans, because often they are not high interest. So a lot of the times they're under 6% interest rate. And they're often large amounts. And so it doesn't make sense for everybody for them to be in the 0 to 3 short-term time horizon. That's going to be different depending on your situation. But that's, for this example, we're going to assume it's like a 4.5% or a 0% interest rate forever, or just a low interest rate below 6% in the midterm bucket there. And then in the long-term bucket, I put your retirement plan and also leaving a legacy. If you, for example, want to leave a ton of money to your college so they can name a building after you, that'd be cool, right? That would be there. Or if you know that you want to leave a legacy for your children, your grandchildren, if generational wealth is important to you, planning to leave a legacy would go in that bucket. For long-term, probably, depending on how old you are, And then, so note at the top, you've got the two pieces. I have two. I'm tired. The two different ways that you could fund your goals. You could fund your goals with $20,000 in cash and $2,500 a month of cash flow. And so part of the conversation I have with you, or you have with yourself if you're doing it on your own, is what should the cash best be used for? You may decide, hey, I've got a $15,000 emergency fund goal. I'm going to establish an emergency fund, put $15,000 aside. Then I've got an extra $5,000 that can go somewhere. I'll use that to repay my high interest debt, my credit cards, just to get the ball rolling on that. And then I have $2,500 a month I can do something with. Maybe it's put all the money towards repaying your high interest debt while you have high interest debt. Maybe it's splitting it between high interest debt and retirement savings, because although retirement is a long ways out, it's still a very large amount relative to the rest that you need to save. So it's important to stay on track with retirement. Maybe this person might say, emergency fund check, 15,000 goes there, 5,000 to high interest debt. I'll do $2,500 a month until I get that debt paid off. And then I'll start to max out or make the max contribution to my retirement plan, and the rest every month can go towards my general wealth building or repaying my student loans. And so just really understanding what your own priorities are, and also just what we've talked about, which is get out of debt, make sure your foundation is taken care of, that bottom level that we talked about in the financial planning pyramid, and then deciding how to split your leftover amount on a monthly basis. And it doesn't have to be monthly too. I work with a lot of clients who own businesses, and so they get K1 distributions or some sort of distribution and lump sum on maybe a quarterly or annual basis, or maybe you get an annual bonus. So all of those can be kind of factored into your planning, but this is just kind of a simplistic way to look at how you could start to put money towards your goals. So while you're working through this process, I always say, do it with a pencil. I was going to say pen. Do it with a pencil and paper first, just to get the idea in your mind about your budget or your cash flow plan. There's that tricky B word I don't like. I put budget because I thought you would like budgeting. You would be more familiar with budgeting tools. But I say cash flow plan a lot because the budget sounds like diet and cash flow plan sounds like meal prep. It just sounds a little better, and it tricks your mind into liking it just a little bit. But a few tools and resources that I thought you might find useful, none of which pay me, just I hear about them or clients use them or I refer to them often. Budgeting tools, and you can do a Google search for budgeting tools and find a bunch of stuff, but You Need a Budget is one that comes up a lot. Mint.com used to be really popular. Personal Capital is one that I know clients talk about a lot. Financial advisors also use tools to help you understand your cash flow and also to do some financial planning and modeling, tell you how much you need to save for retirement, if you're on track or not, things like that. I've seen tools lately like Money Guide Pro, Right Capital, eMoney. Those are ones that are really commonly used with financial advisors. And then there's also a couple online resources I find myself talking about a lot. Yahoo Finance is, yes, Yahoo still exists, and it's they're big in the finance scene. So if you want to just listen to financial commentary and have things explained to you and kind of get the financial world jargon in your mind, Yahoo Finance has a great app, a great website, and they have a lot of content for you to peruse. I love NerdWallet for financial commentary. I love CNBC's Made It on YouTube. They have if you're a nerd like me and love to know how other people spend their money in different parts of the country, they have a really cool YouTube series you should check out. And then Smarty Pig they're owned by Sallie Mae Bank. Some of you have a hate relationship with Sallie Mae, and I understand, but they're owned by Sallie Mae Bank. And what the platform does is basically help you break down your goals and create separate savings accounts and automatic drafts that go from your checking account to these savings accounts to help you hit your goals. So it's like a cute little tool that I like, but I think sometimes a cute tool is really effective at helping you get what you want. So hopefully you find these tools useful. If there's a tool that you think I should know about that's not on here, let me know. Congratulations! We are done. I hope you found that useful, informative. I hope more than anything that you are feeling empowered and ready to take action. So I know there's a ton of information in the world you can get, but you know enough to take an action, even if that action is just reaching out to me with a question or to schedule a meeting. So you could write down your goals, you could look at your cash flow. Those are two big pieces of the puzzle that you could do on your own. And then once you decide how much you need to save, how long you have to save it, then it becomes more clear to somebody like me, or if you're investing on your own, how to take advantage of different tax advantage savings accounts, how to invest that money. That is a different conversation, but you have everything you need to get started having a financial planning conversation. So if this was useful, or if there's other questions you have, or just a comment you'd like to make, feel free to text me at the number on the screen. You can always send me an email with any of that as well. I'd love to hear from you, and I'd love to have a free consultation or a free financial planning introduction with you. So if you're ready for that, head on over to my website, click the link to book an appointment, and you can go ahead and set it at a time that works for you. I hope that you've enjoyed your time here just a little, maybe a tiny bit, and I really appreciate you taking the time to learn about financial planning. Hopefully, I'll talk to you soon. Bye.